Pink on Magic at 8:35. Happy Saturday, I wish. This is what happens when you go on vacation. It is Tuesday, the 18th of September. Mike Barrett with us. Good policy time. Hey, Mike, how you doing?
I was really distraught for a second there. I'm like, what am I doing? I am on the wrong day.
You see my coffee cup, right?
It's not, you don't have enough out of it yet.
Exactly. Yeah, that's the problem. Mr. Chat last week, thanking Donna for covering and chatting good policies with you
it was
here.
nice talking with Donna last week.
This is a time of year, and we've talked about this a couple of times in the past here. People start thinking about their insurance coverage with the change of seasons and such, and I think a good example is what just went on in North Carolina.
Yeah.
It's hurricane season. We've only been hit by like two, right?
Right.
But flooding is flooding, or is it? Huh?
See, that's good. That's good. Nice setup there. So I want to get into it because what prompted this thought, and I know we've talked about flood insurance numerous times, and we'll talk about it many more times. There's no doubt about it. But last night, as with the storm in Houston last year, I saw on the news, and one of the stories was how most of the people that are impacted down in North Carolina do not have flood insurance. And one person who was quoted, he said, look, I've been here 25 years. It's never happened. There you go.
Wait a minute.
That's not a quantifier. That's
Your
not.
ad campaign, the worst time to find out is when a disaster happens.
Right. He even said, I have homeowners insurance. That's not going to cover it.
All right.
No, it's not. So you could live in a house for 150 years and never have a fire.
It's true.
You know, so never look at it that way. So always consider the potential impact, and that's what insurance is. Insurance is for you deferring the cause or the chance of loss, not the absolute fact that a loss will occur. The chance of loss, you're deferring it to an insurance carrier so that it's their pockets that are paying for the loss, not yours, subject to your deductible. So that's why I often will tell people, do not buy insurance only because a bank tells you to. So you buy a car and the bank says get comprehensive and collision on your auto insurance. Or you buy a home, make sure you have homeowners insurance. You buy a home that's now determined to be somehow in a flood zone. Well, now you need flood insurance. And honestly, I'll be honest, that is why 99.9% of the people have the coverage they have. I wouldn't say that much, but for flood insurance, I'd say 99.9% is because a bank or a mortgagee has told them to do so, and that's the wrong reason.
Okay, so here's a question. Recently, I know somebody who has had what the owner of the property thought was a flood, okay? By definition, or at least what I think it is, and you and insurance companies define what a flood is, that homeowner, that landowner thought it was a flood. Wasn't in a floodplain, wasn't next to a brook or a river or anything like that. It was basically water runoff. What does constitute a flood then?
Flood is the inundation of water. But the trigger of what flood is it's dependent on the insurance carrier you're with. So if you're with the National Flood Insurance Program, it's based on impacting either so many neighbors or so much acreage, in addition to you, obviously. With some of the other companies, a flood is a flood is a flood, as defined as a flood. The difference is, and honestly, when we have the storms and the heavy rains up here, what most people have up here is what? A wet basement.
Okay.
You know, they get water in the basement. That is not, by definition of a flood, a flood. That's groundwater seepage, which is excluded on a homeowner policy and would not really trigger the flood policy. It would take a very special circumstance for groundwater seepage to trigger flood insurance. Now, on your homeowner policy, let's say you have a basement that is known to be a wet basement. You have a sump pump in place to keep the water out so that it doesn't become a problem. The sump pump, for some reason, fails. Well, then if you have backup of sewers and drains on your homeowner policy, which is not automatic coverage, that's something you have to purchase in addition to, you could have coverage up to the limit specified in that endorsement. So it really comes down to just having a dialogue and understanding your situation. I quoted somebody who really thought they weren't in a floodplain, but they're in a FEMA participating town. I said, look, I know you're not interested in flood insurance, but I just want to send this quote to you. Take a look at it. It was like $300. And the person said, wow, I want that. And it's so dependent on your location, right? So if you're in a high risk area, and there's many parts of Lyndonville that are identified as a high risk flood area, that can be very expensive insurance to get.
Well,
but if you're in other parts of the town that are maybe right here, it might zone into a preferred zone, which could be much cheaper insurance.
Well, and that would most likely be the one where, as you mentioned earlier, that the bank or financial institution says, well, you live in a floodplain, you need that insurance,
Yeah.
right? That
And
would be
most people will
common.
fight that. Most people contest it. They say, no, I don't. And they don't want to have to get the insurance. But, I've had stories and situations where people didn't attain flood insurance who really should have, who were greatly impacted by flood waters.
Well,
So it can happen anywhere, anytime. If it hasn't happened in 25 years, that's great. It doesn't mean the next 25 years necessarily are flood free.
All right. Well, at $300, I'm assuming that's the annual rate.
Yeah.
If you have a flood, and it's going to cost you more than $300.
Well, the statistic that I saw in the news, and who knows how absolute correct it is, but it was quoted as coming from FEMA, saying that 6 inches of water in a house can cause like $40,000 damage. A foot of water in a house can cost $70,000 damage. You get more than that, you're looking easily at $100,000 in damage. So that's a lot to think about, and that's a lot to take on if you do not have anything that will pay for that. That is going to become money out of your pocket. It's going to become low-interest loans from the government to try to get you back in your house. So, boy, don't ever think that because you are not looking at a river or a body of water that you would not have a flood. If you're in a village and the village system cannot keep up, and now you have a whole street that's flooded. It's inundation of water. May not have come from a river, may not have come from a stream, but it came from it's water. So it would be defined as a flood by most companies, depending on how many people and how much land is impacted, with FEMA, or even less of a trigger with some of the other companies. And you would have coverage.
Well, you mentioned all the time, too, one company may define this as a flood, and the other one may not define this as a flood. One may give you flood insurance, one may not. So we say this all the time. You have to have the conversation.
You do.
Ask the questions, get the answers, and then make a decision.
Right. I mean, if I come at you and say, look, you could have flood insurance for $300, you may think to yourself, I'll do that. Or, hey, you could have flood insurance for $4,000. Of course, if I'm coming at you saying it's $4,000, it's because you're in a high probability zone. As much as you don't want to get that, you probably should. Because $4,000, you think about how many years you have to pay a $4,000 premium. You get $150,000, $200,000 payout on a devastating flood. You've deferred your expense. So it's a tough situation. It really is. But insurance is all about identifying the risks that are probable. All right, not guaranteed, not absolute, because if that was how insurance worked, there wouldn't be insurance, because nobody wants to pay for something that they know is going to happen. They they want to have coverage for something that could possibly happen,
And they don't want to pay for something that they know is never going to happen also. So, folks,
we love it when they pay for something that's never going to happen.
I don't like being that one. But anyways, all right, folks can get a hold of you with questions on all of their insurance needs.
Yeah, give us a call, 748-5224. You can visit our website, thebarrettagency.com, or on Google, Facebook, and YouTube as Barrett Insurance Agency.
All right, thanks an awful lot.
Have a wonderful day. Welcome back.
You a Red Sox fan or Yankees fan?
Red Sox.
Red Sox?
Yeah.
All right. Hope is having their annual food drive right now.
Oh, good.
Red Sox fans versus Yankee fans.
Yeah.
Today's the first inning.
Oh, I'll buy a couple gallons of something and bring it over.
Well, it seems to me, Steve has told me that the Red Sox fans have won the food drive more than the Yankees have.
Yeah.
Well, right now it's 0-0. So folks got to step up, make a
anybody's
donation.
game.
That's right. Yeah. All right. It's Good Policies, Magic in the Morning. Music.